Hello everyone, Nick here. Welcome to the show if you're new. Thanks for coming back if you're not. After digesting NIO's Q1 earnings report, I want to take this episode and really break it down, what I liked, what I didn't, and where the company is headed from here. We'll be hitting all the key points brought up through their Q1 earnings report and touching on their earnings call as well. We have a ton to get into, but before we get it, Webull is giving out 2 free stocks worth up to $1,850 for free. You could trade before and after hours markets. They are a 0% commissions based trading platform. You really don't want to miss this one. The offer ends soon. Alright, so let's start off by taking a look at NIO's shares. So we saw an aftermarket and pre-market sell-off before trading on Friday, which I just thought was completely ridiculous and unwarranted. NIO then quickly climbed back into the green. We typically will see a sell-off after every NIO earnings, regardless of the actual outcome, so always take these with a grain of salt. Might actually offer nice buying opportunities in future earnings. We finished the day on Friday up 84 cents to $39.84, up 2.15%, and traded up another 28 cents in after hours. Now back up above that $40 mark at $40.12. This beat out the macro market, with the Nasdaq closing down on the day 0.85%. So let's just jump right into the earnings. On face value, I was quite happy with almost everything in this quarter. However, there are a few concerns I have moving forward, which I will touch on shortly. So right off the bat here, we see that record-breaking total revenue of $1.218 billion USD. This did beat out expectations and even beat out my prediction. This is up over 400% from this quarter just last year. 482%. I know Q1 2020 obviously inflates these growth percentages, but guys, this is incredible growth irrespective. We knew heading into the quarter deliveries of 20,060. This was of course an all-time record as well, beating out their previous record of 17,353. Now we are still seeing their second largest vehicle, the ES6, with the bulk of deliveries. However, I do expect this to shift, as I believe the EC6 will become their highest selling model in a couple of quarters. Now, as always, two of the most important metrics I gravitate towards are vehicle margins and gross margins. So let's take a look at those. Many analysts had actually projected stagnating vehicle and gross margins of around 15 to 17%. However, NIO again was able to hit these out of the park, which I am ecstatic about. Vehicle margins are now sitting at 21.2%, finally over that 20% mark. This really is incredible as they've grown to the significant milestone so quickly. Their negative 7.4% from Q1 2020 really just does put this growth into perspective. Their gross margins are now 19.5%, and it's highly likely they will be able to slightly push over the 20% mark in Q2 this year. Li Bin actually stated during the earnings call, I'll have more of this later, for investors to manage their expectations in terms of future gross margins. The company has been rapidly increasing this metric, and further growth is possible, but not nearly at this rate. Loss from operations was decreased 68.2% from just Q4 only to 45.2 million USD. Really a drop in the bucket in terms of their overall cash position. Net loss at only 68.8 million, a massive accomplishment. This is a decrease of 67.5% from just last quarter. These kinds of decreases are extremely hard to come by. Now, something a lot of investors were confused by and commenting on was NIO's net loss attributable to ordinary shareholders. This was posted at 744.1 million USD, nearly $750 million. This is a 226.7% increase from just Q4 2020. However, there's more to this than it shows. We need not forget the majority of this can be accredited to NIO's continuous buyback of the company from NIO China. NIO ADR, the American branch that we the shareholders are exposed to, gained an additional 3.305% equity interest from the minority strategic investors. The company recorded $671.6 million in accretion on redeemable non-controlling interests to redemption value. So the adjusted net loss was actually only $54.1 million, relaying to a loss of only 4 cents USD in diluted net loss per share. This really is fantastic. We gained additional insight into their extremely hefty war chest, now sitting at a whopping $7.3 billion USD. It just keeps growing. Now, as I had previously predicted, other sales continues to be an extremely promising point for this company. This is now pushed above the $80 million mark at 88. I am very excited to see this aspect grow and grow so rapidly at 395.3% increase YOY. So why did this happen? Well, the company is noting that more users are now opting into the 100 kilowatt hour battery permanent upgrade service that was implemented just in December of 2020. More users are also opting into the NIO Pilot Advanced Driver Assist System, relaying to that increased profit margin on the vehicle sales that we had seen previously. These together are actually adding to a higher average vehicle sale, which is why NIO outperformed analyst expectations on vehicle revenue. This is all fantastic news as it indicates a few key points. The Chinese consumer is willing to move firmly into the luxury sphere. The consumer is also enjoying the tech and the autonomous driving features, and if this says anything, it says that NIO's risk to dive into the full stack NAD system through Aquila will likely play out extremely well for them in Q1 2022 with the release of their tech-heavy ET7. Now, we are also gathering that there is increased demand far surpassing supply currently. NIO will have trouble catching this demand, which poses a problem for them in future quarters. However, this is a video for a different day. We are seeing NIO's R&D drop slightly, down 17.2% to $104.8 million. I do expect we will yet again see significant increases moving into Q2 as the company rapidly expands into Norway and begins the developmental stages of their next sedan after the ET7. Nothing to worry about here, all good so far. Now, moving into future quarters, the company is guiding for roughly 21 to 22,000 vehicles per month in April, May, and June, at a very stagnated QOQ increase of 5 to 10%. Now, this is where many investors and analysts will be slightly concerned. NIO's quarterly deliveries have been rapidly growing for the past 5. From Q1 2020, we see significant jumps every single quarter. However, Q2 will likely mark the first of hopefully only 2 quarters at a stagnated output. Now, you may be aware there is a semiconductor shortage plaguing the entire vehicle industry currently, and this is putting extreme pressure on tech and specifically EV companies. This output would only represent total Q2 revenues of $1.243 billion USD, a 2.1 to 6.5% increase from Q1. This could potentially spark selling and scare many investors away. However, I do personally still firmly believe in the company's long-term prospects. Li Bin, NIO's CEO and founder, states that he believes the shortage may indeed still get worse before it gets better. This problem is expected to be at its worst throughout the current quarter and is hopefully to be mitigated by Q3 or Q4 of this year. There are reports coming out of China that state that NIO is likely to come out of this by the third quarter. However, we will have to keep an exceptionally close eye on the story as it develops. Now, moving into the earnings call. There weren't any major surprises here, however, we did gain some additional insights. Li Bin states that their first ET7 rolls off the production line on April 2nd, the second-gen battery swap was unveiled, etc., etc. Now, we did gain insight into the 100 kilowatt hour battery cell pack. As of April 16th, there are now more than 10,000 users who have upgraded to this pack, which is incredibly good news. This is why the margins were much stronger in this quarter, and I'm hoping this figure can continue growing. Li Bin goes on to talk about the 5-day facility shutdown and that the team has modified their production lines during the shutdown to prepare for the mass production of the ET7. This does indeed put the Q1 delivery of the vehicle on time in terms of actual physical production and manufacturing lines. However, we yet again run back into the semiconductor issue. Li Bin later states during the question and answer period that he notes there could be potentially difficulties in terms of securing semiconductor supply for the ET7. We know the ET7 is LiDAR sensor heavy, equipped with Aquila and NAD full stack. However, the company is, quote, quite confident, unquote, they will be able to deliver according to schedule. This wasn't the over-optimistic answer investors were looking for. It does seem quite loose, quite vague, so I wouldn't be surprised, if anything, to see the ET7 roll out late Q1 rather than early Q1 like January, as some were speculating. However, this is simply speculation at this point. Li Bin continues to state, there are now 23 NIO houses and 211 NIO spaces in 123 cities in China. This is showing their continued domestic rapid expansion. They have 206 swap stations, and the company does indeed plan on hitting the 500 goal by year's end. This all while ramping up the power charger and supercharger availability. All very great achievements and goals for the company. He states more numbers on NIO Power North and NIO's new NIO Park. I'll have a full video about this shortly. And he closes by stating what I've been stating for months now, that 2021 is the ramp up year for NIO. No, it's not the year where everything happens for them. It was never going to be. The year that everything happens for the company, in my opinion, is 2022. This is when the company is going to absolutely surge, both in global expansion, deliveries, margins, and of course, revenue. All in all, I was really pleased with this earnings and the quarter. There will be future struggles amidst the semiconductor supply strain. However, we need to remember this is a global issue affecting all EV brands. It's not NIO specific. You can almost think of it as though all companies are currently stuck in the mud somewhat, and there's no company actually driving away, taking a lead. Everyone is simply moving slower. It's because of this that I'm not overly concerned that we're likely heading into somewhat of a stagnant quarter. It will be a great time for NIO to keep doing what it's doing, planning, pushing R&D, autonomous driving tech, push e-commerce, and ramp up for the massive Q1 2022 with the ET7 reveal. I will have a video coming out very shortly about NIO Park. Don't forget about the Webull promo, 2 free stocks worth up to 1,850 for free. You could trade before and after hours markets. It really is a no-brainer. Anyways, everyone, see you all in the next video. Take care, happy trading, cheers.